The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Daryl Martin. Now, Daryl Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour here on TFNN. Make sure you watch us on live on Tiger TV, TFNN.com, or check us out on your mobile phone from anywhere in the world with 9 hours of live trader commentary each and every weekday right there. Again, that's at TFNN.mobi. You can listen in on your phone from anywhere. And right now, let's check it out. We got the S&P up just a mere 1.5. So very quiet lately. We got the Russell up point 30, point 40. We got the NASDAQ up 7 points. We have the Dow up just 23 points. Oil is up about 70 cents on the day, with natural gas currently being down 0.149, and we got corn is up, or down. Sorry, corn is down $8 in the day, with soybeans moving on up 17 points. So nice move in soybeans. We got euro dollar just up a mere 13 pips. We got the Aussie dollar down 54. Looking over at the pound dollar, it's up 72 pips, and the U.S. CAD up 14. U.S. franc is down 29, with the euro yen down 6, and the pound yen up 42, with the U.S. yen down 16 pips on the day. Had some decent movement, had some news that came out overnight, and so let's check it out and see how we could have taken advantage of those reports and trading in some of the trades that we even did today based on those reports. We talked about them, which ones to look at, and I'll go through some of those for you. So checking out, what reports did we have? One of the ones looked at for our trades this morning, we went in and had a news trade on the U.S. yen. So earlier in the morning, that was right around 8 o'clock, looking at getting in for the 8:30 announcements coming up. So let's start off with that one. We'll hop on down here, check out the USD yen, and right here, so right there, can you tell when the news came out, right? So we got the news right here. I'll put a little marker right there for it. So that's where the news came out. That's a really little marker. And let's see if we can make that bigger. Will it let me increase the size? I think that's just how it does it. Anyway, so I'll make a bigger sign for you. There we go. There we go. So news came out right there in the center of that, on that chart for you. And what news came out? Well, at 8:30 we had foreign security purchases from the USD CAD. We had building permits right here from the U.S. We had core CPI in the U.S. We had unemployment claims in the U.S. We had CPI in the U.S. and we had housing starts in the U.S. So we had a big list, to say the least. The USD CAD had foreign security purchases. It was lower than expected, and that is basically a measurement of domestic stocks, bonds, money market assets, things like that, purchased by those outside of the country, and is a lot lower than expected. So the demand for those securities by foreigners, obviously affects their currency. And we can go over and we can look at USD CAD on that too here in a second. On most of the USD reports, I found that I usually trade the USD yen. It usually has the most consistent high impact, especially right now with everything going on in Japan. And so I can look at these reports and see, like if I'm looking at, say, like an Olsen scale, then I can see, hey, 1.4 on USD yen. Notice the other pairs, much lower. And so it's like a sort of like a seismic quake index, or, same thing you do like on an earthquake. So like what kind of impact does the news announcement have on a certain report? So what do we have? Well, we had building permits came out. They actually came out a little better than expected. So which was good news because the job market showed that there was a drop in construction home jobs the last major report that we had. But it actually came in at 1.02 million, and the expectation was 0.94. But core CPI came in at 0.1, expectation of 0.2, and which is interesting. But it's the change in price of goods and services purchased by the consumer. not including food and energy, which is what we spend most of our money on anyway. But its food and energy prices account for about a quarter of CPI, but they tend to be very volatile and distort it, so therefore they don't include it in the core CPI number. Even the CPI number, okay? The CPI month-over-month number, they expected it to come in at negative 0.3, came in at negative 0.4. And that actually does account for it and shows that we don't have inflation. We have deflation happening. So that was negative news right there. And then, so negative news on the dollar. So deflation of dollar dropping, right? So right there we got the negative news right there. Then we have unemployment claims. Came in much higher than expected. They expected it to be at 332,000. Came in at 360,000. We had another housing number. Not only did we have the building permits, we also had housing starts. The building permits were up. So the allowing to be built were up. But the starts were actually down. So they expected them to come in at 0.98 million. They came in at 0.85. And it's an annualized number, by the way. So it's all the new residential buildings that began construction during the previous month, and they annualize it. They release it monthly, 17 days after the month begins. And it's reported basically the monthly figure times 12. So whatever that number is, they multiply it times 12. So it can sort of give you a false impression. But so saying, hey, assume this goes out times 12. And the building permits are more important, but they are obviously integrated because one is permit, one is actually doing it. And so right there, anyway, so the news report comes out. We go in, we put on a strangle, okay, or straddle over on Nadex. And we use the spread scanner to easily find that. And we got an interesting topic today. I got something to show you that we just added in. And so I'll show you that as well. But let me pull it up real quick. And you'll be able to see. I'm pretty excited about this. I already was playing with it quite a bit this morning. We got about, I don't know, found about little 30 little bitty things I'm going to go in and add to it to get it to where I want it to be. But right here, you can go in, you log in, go to tfn.com and get the box spread scanner. And when you pull that up, you'll be able to see it. But you'll also notice we just added a binary scanner. So yes, we can now scan the binaries on the Nadex platform. And you can go in and go, I just want to look at the sells. I just want to look at the buys. I want to be able to see, ones that expire in a certain amount of time. I want to see ones that are right at the market, maybe. So the ones that are like a 50-50, up, down on the market. Pull up both sides, do the same thing. See which ones exist within that pricing model. And so there's a lot of cool things. I'm very excited. And we even added in a simulation price. So I can go in here and extend this out. But I can actually add in a simulation price on it and go, well, what would happen if the market moved up to 1665? And it'll actually show me the P&L effect on that binary if it moved up. What's really powerful on this, and I mean very insanely powerful on it, is as you learn how to use this, and we'll be building some tutorials and stuff to go with it very soon, but as you learn how to use it, then what you're going to start noticing is that there will be a better trade than another trade. So let's say we thought that the euro dollar is going to pop up to 29.35, and that's a pretty big move. But let's just say we were expecting that. Look at this. Yeah, you're going to make $4 for every dollar at risk. You're going to make almost basically $8.50 for every dollar at risk. You're going to make $5. So there actually is a curve, a volatility curve in the binary. And you'll be able to see that very easily and find out sort of what is that. If you're really expecting that volatility, which one is the best one to buy? This one costs $2. This one costs $3.50. Is this one better than this one? No, because you can make over double the amount of money with not double the amount of money you got to put up. And this happens, like I said, over and over and over again on these trades. And this one's $5. This one's $6. You don't even make a 1-to-1 risk reward on this, on that move. On this one, you make a 400% reward. On this one, 200%. So which one's the better trade? It helps you, you can use that simulated reward risk ratio to definitely find, the best trade that's available for you based on a certain movement in the underlying. Also, let's say you have a whole bunch of trades expiring at the same time. So, at 3 o'clock, we got trades coming up at 3 o'clock, right? Well, instead of putting the 2-hour ones in one group, which is going to happen over in Nadex, so if you go over here and you have the euro dollar up right here, and you got, let's say, 3 p.m. So right here, these are the daily 3 p.m.s, but there's also intraday 3 p.m.s. Well, they all work the exact same way. So it's just the intraday 3 p.m.s are only 10 ticks wide, whereas the dailies are going to be 20 ticks wide. Well, now we put all the intradays and dailies together. They both expire at 3 o'clock. Who cares how wide they are? And now I can find the absolute best choice for my money and see, is there a better risk reward? Is there a better payoff? Which one do I want? Maybe this one's better than the other one based on what I want to do. It's closer to the exact strike I want. So we combined expirations together. So that way you don't have to, try to flip between, 3 p.m. here and 3 p.m. here. So there's a lot of little advantages and a lot of big advantages this will give you. And we'll add in a few more bells and whistles, and it ought to be done here in the next few days. But we just wanted to put it out there. If you have any suggestions and you're already in there, use the help desk. And right here you can actually ask me any questions. So it's a great place to put any suggestions you might have. And they all come into me, and I'll be glad to look at implementing them. We're going to put a simulation price for down and a simulation price for up. We're going to adjust this right here, the expiration time. We have it moving in 30 ticks. We're going to make it where it's just a drop down, so it's a lot easier than using a slider. Slider's cool, but the drop down will be a little more functional. And we're going to make it where it remembers your price. If you switch from one to the other and then back again, it'll be there. So just, little things that we're going to add in. But one of the things that's going to be cool, and this feature ought to be coming up live here in the next couple days, is you'll be able to go and say 75. And so I'm always talking about these iron butterflies, and it'll actually narrow it down for you. Once we add in, we got to turn on that filter. Once we turn that on, you'll be able to narrow it down and find butterflies on it too. So, which are premium collection trades. And so that's a couple things for you to just check out. But I was talking about earlier, I was going, hey, we talked about doing a news trade on the USD yen, right? So over here, with this dollar yen, we can see the market, flew it down. So right over here. So how can we take advantage of that? Well, we went in and we hop here on the spread scanner, and we said, okay, I want to find a couple trades that I can take advantage of, and we went to dollar yen. And then we said, okay, well, I want a 1-to-1 risk-reward ratio. Whenever I'm doing a spread, that's what I want to use. And I choose all, and I choose both. So now I can see everything that's there. And basically I can find out, what's the best ones for, what I want. So I can go over here and go, well, I want ones that match up. Anyway, so we put it together, and I'll show you the result of that news trade when we get back from this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Daryl takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, welcome on back here to the Diagnostic Trading Hour. So what we're checking out right now is looking over at the spreads right now, checking out the news trade for the USD yen. So we went in and we're trying to figure out, okay, how are we going to take advantage of this trade? And so we put in a order to buy the dollar yen 102.50 to 103.50. So what does that look like? Let me pull it up. So by the way, it would have been on here. You would have selected, just to give you an example. Obviously, it's past the time now, but like right there. Okay, that would be what it would look like on the risk reward graph. So this is your P&L. Okay, and this is the price of the underlying market. The market moves up, shows you making money. Market moves down, shows you making money. Market stays flat, then you got about $15, $20 of risk on this trade. So the combined of the two, okay? And that's if it stayed, finished right in the center. If it does anything but finish right in the center, then you'll lose less than the maximum risk. That's why I like the spreads for straddling news versus the binaries, personally. So if I want to draw this on a chart, what would be happening here? Okay? So let's do that. And let's zoom in. And then let's go. Okay. Now let's draw it on a chart. Well, and then this is why I call them box spreads. How about we do a buy of the 102.50 to 103.50? So we're right here, 102.50. We're buying up to 103.50. Okay? So right there. And that's going to go till 10 o'clock. Okay, so we got that one drawn on. And then we're going to go over here, and we're going to do this one. And I'll change this one to green. You know, obviously we want it to go up, right? The idea. And so here I sold the 102.50 down to the 101.50. And that's my trade. So that's what I'm looking for. And I'm looking for it to be within a deviation move, ideally, for, you know, my profit target. So first, where did I buy, where did I sell? So I know I bought this one, but what price did I buy it at? Okay, well, I bought it on here at 102.62. So we go over here, 102.62. All right, and then I sold this one. I can even put a little text note. So bought 102.62. And we'll even put bought the, what do we buy? We bought the 102.50 to the 103.50 at 102.62. Okay? Which makes our risk $12. How does it make it $12? Well, that's 102.62 minus the floor of 102.50. So that's the bottom of that box. All right, so we got this one in here. And, you know, I guess we could change that to green. So people like things to all match in their colors and everything. So we got that one in there. We bought that one. And now we sold the one below it. So let's go in and look at that. If I go in here and I sell the 102.50, I'll put the floor first to make it easy. 101.50 to the 102.50 at what price? 102.45. Then my risk is $5. Okay? So if my risk is $5, how's my risk $5? Well, I sold at 102.45. Okay, so 102.45 sold price minus 102.50, which is the ceiling. All right, I put that in there. Got it on. So what is my risk on the trade? My risk on this trade, where'd that go? Okay, so I'll put this in real quick. But 101.50 minus 102.50 at 102.45. Risk $5 because I sold 102.45 minus 102.5. So all I'm doing is I'm simply taking the sold price minus the ceiling price to get a risk of $15 or $5 on that trade. All right, we'll come right back. I'll show you what does that mean our total risk is and where's one-to-one at, so you actually know how to do these yourself. And there's a lot of news, so there's a lot of opportunities to take advantage of this. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, so here we go. So we're going in. We got the USD news report coming out. And we're like, what's going to happen next? How are we going to take advantage of it? I don't know what's going to happen. I just know that there's all these dollar announcements coming out. I don't know what direction it's going to go, but with that many news announcements at once, I do expect it to move. Okay? And so I go in here, and I'm trading Forex, which usually I'd be putting up a couple $100. I'm only putting up $17, and I'm not directional. I'm going both directions. I'm going buying and selling. If it goes up or down, I don't care. Just go somewhere. Okay? It's a nice way to trade, by the way. And so I don't care what direction it goes. Just go fast. And so we put the trade on, and now we have to wait. So we put it on there and get into it around, just after the 8 o'clock hour here. So actually, if I want to draw these right to about where we got the trade, around about 8:06, okay? And again, it goes until, 10 o'clock. So that's where you get these, boxes, right? So that's where it starts. That's where it stops, okay, like right there. So that's where the actual spread is going to expire. And so I have this whole box right here I can take advantage of. And with that, I go in, and I go, okay, well, so if I'm risking $17, I need to make $17 plus the risk on the other side in order to have a 1-to-1 risk-reward ratio. So what does that mean? Well, 17 plus 5. I need to make $21. I'll get $22. on the trade. And so I go in and I got to calculate everything out and figure it all up. And so what is my take profit order? So once I'm filled on the buy side, then what price, do I got to get out at? Once I filled on the sell side. Well, on the buy side, I go in and I look at, the different possibilities, things I put together, but it's really not that hard. So take 17 and add $5. That's going to give me 22. All right. Well, what price did I buy it? I bought it 102.62. So let's just make that 22 pips. Okay. So 102.62. 102.84. If it hits 102.84, I get out. So as soon as I get in, I put my take profit order to exit right up here at 102.84. So I'm hoping that the market will go from right here to right there, and maybe I can make that even a little more visible. Let's see, what can I choose? Any money, all these different colors, right? So we'll do that, and we'll just make it really big there. So I'm basically looking for that movement right there. Or what about the downside? Okay? So what if it goes down? So I can make 100% return on my trade. What would I need to happen? Well, I got $17. All right, plus what I risk on the other side, 12. So 29. So I need to subtract 29 from my sell price. So we go in here and go, okay, well, what's the sell price? Well, the sell price is 102.45 minus 29, right? So you go in there, and that says buy back at 102.16. So now I'm looking for the market to go down to 102.16, so right down to right there. So right at this price level, and again on this one right there. So we got 102.16. That's what I'm shooting for on this trade. If it will get down to this level, then I'll be able to take a nice profit. And so I'll draw that line on there for you right here. So if I can get this to go either up to that point or down to that point before expiration, okay, then I have a profitable trade. My danger zone is sort of in this little yellow area right here. So now I have maximum $17 risk. I may only lose 5, 10, 15, may break even. It may just end up $17. But if it'll end up $17 plus my risk on the other side, I make a profit. So we put the trade on. Announcement comes up, put it on at 8. Announcement comes out at about 8:30. Market doesn't do much of anything, and then it just explodes. So it flies right down, it instantly hits our profit, and we're done and out of the trade in a very short period of time. The target was filled at 8:34. So beginning to end, you're looking at about 30 minutes from entry to exit, 100% return, being non-directional, using news and the volatility of news, not being directional on that news, not caring, just saying, hey, go somewhere, to be able to bring a profit in. So, like I said, it's a totally unique way to trade the news, because usually, you have to pick a direction, and you have to do all this other stuff with it. With this, made it very simple, very easy. You can't really make it much simpler than that. And, the only issue is how do I find the best spread? That becomes your biggest challenge in all of these news trades. So, that's why I built the spread scanner, because I'm like, I don't have time to go in and search through 100 different spreads. Once I know there's a news report coming out, I want to do it now. And so I want to hop in here. I'm like, okay, lower spread, lower spread, lower spread, lower spread, lower spread. And, okay, I just narrowed that down. All right, I probably don't want this 102.60 to 104.10 trade. Boom. So I got rid of that one. Now I have two straddles available to me. One expires in 19 minutes. The other one expires in 9 minutes. Let's get the one that gives us a little more time. That's my trade. Now I'm risking $20. And now what do I want to do? Well, I want to put my trade on. So I can choose live or demo. You can go either way. So if I choose demo right here, and I hit buy, and then I hit sell, and then instantly there are my tickets. And I can place the orders. So just click. I want to do a straddle. And once I'm in there, then I just need to take a few minutes and pause and figure out, okay, what is the take profit price? So hopefully you're picking up a few of those pieces. If you have questions along the way, let me know right there on the help desk. Okay? And I'll be glad to help you in any way that I can and answer your questions. And I've had quite a few come through lately and helped out quite a few people. And but the box spreads are awesome. And if you want to go in and you want to learn the binaries, hop on over there. And we got tutorials on binaries as well. So same price, included. Binary scanner comes with the spread scanner now. So you're not paying anything additional. And we just added that in. And we'll be adding more upgrades to it here in the next week, and it'll be ready and fully. It's already functional and it already works. I just want to add in some more things to make it even easier and better to use. So as we get all these pieces in, get them all put together, and then we'll keep adding in more. Then we're going to add in a hedge scanner. Then we're going to add in an analyzer where you can combine binaries and spreads and underlying markets. And then once that's done, then it gets really fun because the next step. And I mean, we don't know how long this stuff's going to take. I mean, we're hard coding all this from, imagination to reality. Eventually, we'll actually have all this feeding directly into charts, where you can trade all of this right off of the charts. And just we're having to start here because you got to figure out how you going to narrow this down. You're going to have 100 binaries at one time. You don't want 100 binaries on your chart. It'd be a little difficult to read, but it's getting cool. And it's fun, and we're getting a lot of great feedback from traders. So hopefully, you've had a chance to check it out. If you haven't, just hop on over to tfnn.com and go down here to the Diagnostic Box Spread Analyzer. Click on that. You can subscribe. Like I said, 2-week free trial. Get you immediate access to it. And, also there's a bunch of great education over on youtube.com/Nadex. You can go over there and check out their playlist. And they have just a lot of tutorials. But we have even more and unique ones right in here that'll help you out. You get access to them for free. And so step by step, how to use the scanner, how the deviations work, just putting together all the math. And I think that, most people who get in there, as long as they'll spend a little time, and not a lot of time, but just a little time, really start to find the value because just the massive leverage, the defined risk, the not getting stopped out depending upon what spread you're choosing, trades that become available to you. And I mean, think about this: euro dollar, you want to hop in pound dollar. We can pull up any market we want to right now. So we go over here now, and let's see. You grab this, and so once that's up there, you go in and we pull up, say, the pound dollar. Got a decent little move today. And we're at 1 deviation right now. I don't know if you knew that, but we're sitting at 1 deviation, which is 70% of expected move in any given day. And really from high to low. So we're actually a little past 1 deviation on the high to low. But I mean, you see the day before, look at that. We got a little bump up to half, and then the most that moved down right there about 1 deviation. And then right over here, we got a half up, half down. Well, that's 1 deviation. We got to move up to 1 deviation right now. It's just oscillating at that level. So maybe you want to short, maybe you want to sell, whatever you want to do. Any trade you want to do, how much you got to put up on that trade? Do you know? Do you know how the leverage and the margin works on FX? Maybe you don't know the power of that. So if you don't, let me show you. It's really pretty cool. Margin would normally be, you take, let's see, 1.52. Let's see, what is that right now? We got the market sitting all the way up here at 1.5306. Okay. So if I open that calculator back up, we got 1.5306. All right, and then we're going to divide that, or multiply that times 10,000. That's $15,306 on a mini lot. Now, in FX, on spot FX here in the States, you get a 50-to-1 leverage. So you divide that by 50. You'd have to put up $306 plus floating P&L, okay? Plus have to deal with carry interest and everything else. $306 if you want to buy or sell the pound dollar on the spot FX market right now. All right, well, what if you want to do the pound dollar on the CME? How much would you have to put up? Let's check it out. Products, CME, FX. Now let's scroll on down here. Let's check out the pound. Okay, so we got British pound futures. So now we go in here. What would you have to put up on this? Well, so a lot of different things we can check out, but let's see if they have their span margins built in. Here, I'll give you, there's a simpler solution. I can go through this, but I'm going to go to a simpler solution. But the maintenance margin right now in the pound dollar for 1FX looks like his initial is $1,300, maintenance is $1,200 to do this. So, and it depends upon what size you're doing and everything else. Let's see, one of the brokers I like to use, Amp Futures. I use Justin. He is awesome, gives you really low commission rates. And pull it up. Let's see here, let's see, Amp Futures, and then let's put in margins. There we go. Alright, so now it's GBP. So, what you're looking at on a pound dollar contract, okay, is $1,600 on initial margin. Day trade margin, $500. And what size is that? How big is that? Okay, because that's important. You want to make sure you understand, what size is the actual contract. And it's 62,500 British pounds. Okay? So if we go in and we look over what would that require on, Nadex or anything else, then you can see that the numbers drastically vary, but the FX being 306, so that's horrible. But on Nadex, what would it take for you to put on a pound trade? Would you have to put up near as much money? Well, let's see. Pound dollar. Let's scroll on down. A few ticks away from break even. Okay, so not a big deal at all. $8. $92 on the high end. Okay, $4. That 12 minutes from now. So if I want like maximum time, then I'm looking at as little as $8 to place a trade. $61. $95, $9. So on the high end, you're getting 300 times the leverage. You're getting 150 to 1. On the low end, it just becomes astronomical. Check this out. We go in. We go, okay, well, if the pound dollar currently is worth $15,307, and you're telling me that I can buy it with a max risk and margin of $9. Okay? That's 1,700 to 1 leverage. 1,700. That's your money working for you. Okay? 1,700 to 1 leverage. And your max risk is $9. That's including fees, by the way. Okay, that's everything. $9 is your max risk. And you can't get stopped out. So if I decide to buy that and the pound dollar drops down 30 pips and then comes back up before expiration, I can actually still profit. I don't know that is my stop loss. My trade and my stop, same thing on that trade. And maybe I do want to trade with stops, and I want to have a really tight break-even distance. I want to do the at-the-market spreads, whatever. Then fine, I can do that right there. 2 pips away, $92. That's still a third of the amount. So I can go in on the exact same trade. Instead of having 50 to 1, I can have 150 to 1. So I'm still getting better leverage. And I have defined risk. Even with the $92. Let's just say if the margin was the same. Let's just say the margin was higher. It's defined risk. The market can blow up, and you're okay. You're defined. The amount of money you put up, you can never lose more than that. Doesn't mean you have to lose all of that, but you won't ever lose more than that amount. All right, stay right there. We'll be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Sorry about that, folks, but right back here and talking about some of the things happening over on Nadex and the margin that you can take advantage of. And, you can't really split up an S&P E-mini. You can't really split up a Russell 2000 futures contract. But you can on Nadex. You can do 5, and that equals actually 1 full-size S&P E-mini. You can do 10 futures, and that equals 1, Russell 2000 TF futures contract. So you don't have to go, if you want to tier your trades, if you want to tier out, tier in, things like that, you don't have to add on a whole another level of risk, in the sense of I have to go 1, 2, it's either 2 or 1. I mean, there's no in between, there's no half. So over on Nadex, I can go, I can do half of a Russell 2000 futures because I can do 5 contracts instead of 10. And I can add in 2 more. I don't have to add in another Russell future. I can just add in 2 more Russell future, or Russell small cap 2000s over on Nadex because they tick in 0.1 just like the Russell, but every tick is $1 instead of $10. So I can do a smaller increment, and I can be more precise on my risk. So when I'm doing trades, I'm doing percentage-based risk, and I want to make sure I do this amount. And I can do 15 of these. It's like on the Russell, if you're trying to risk, $100 per trade, well, what happens when you have 12 points risk and 7 points risk and 6 points risk and, that type? Just depending on what trade you're doing. Like, obviously, it can fluctuate, so you can't really fluctuate your contract sizes easily like that, whereas you can do that easily over on Nadex to really make it match up. All right, so with that there, what do we got going on? What else is happening? We have the Philly Fed Manufacturing Index. Let's check out the impact there over on the S&P. So pull that up for you. And right here. So on the S&P right there, really flat. And I actually put on a butterfly. I'm like, I think the thing's just going to flatten out now based on my analysis. And it has. It's just done nothing. So anyway, we had the report come out, unemployment claims come out, the CPI come out, then we had the Philly Fed Manufacturing Index came out. That was negative, but everything's been running so hard, it's having a hard time giving it back up. And we had some volatility. Right here in the morning, we had a little volatility on that report, and you can see it right there at the 10 o'clock report when the Philly Fed came out, because it was negative news, but the market just doesn't seem to want to go down. So it drops like 4 or 5 points. Turns right back around, goes up 4 or 5 points, goes back down, goes down 4 or 5 points. It's like, come on, make up your mind. And, we're just getting, negative news, it's like the market's just being bought up after every negative news report. And so all this bad news comes out and nothing happens. So what do we got coming up tomorrow? What news announcements are there that you might be able to take advantage of? The one trade, really, that we have is going to be the USD CAD. We got core CPI, and wholesale sales all coming out at the exact same time. Should be a decent move. I like it a lot when we have USD reports and CAD reports happening at once. Those are usually explosive moves. But should be a decent move right there on the CAD, and that's at 8:30 a.m. Eastern Time in the morning. And so let's do a quick market wrap, see where everything's at. We still got the S&P flat, up 0.75. We had the Russell up 1.10. We got the NASDAQ up 8.5. The Dow's up 20. The oil contract now is up 84 cents, so oil is moving a little bit. And let's see, let's check out oil now that that's starting to actually take off. It was only up a small amount right there at the start of the show. So you can see it's flying on up, and yeah, we got a nice move up to 0.7. So we'll see if it keeps that going through the end of the day. But it may come back up to this 95.38 level, or just go into chop since we already broke the 10-minute deviation stop loss method. Anyways, I hope you'll have a great day, and I'll see you tomorrow.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.